We're going to look at the TNX and do cycle analysis on it. This is a good opportunity for me to present cycle analysis to a lot of people that are watching us for the first time. And this has been an odd week because usually in the case of a market that moves up very sharply, you would have rising yields. The bond market would fall as there's no need for a safety bid because the market is so strong. And then there would be the potential for interest rates going up because if everything is so good, then the Fed would act to raise interest rates, but that's not what happened. 10-year yields fell about 10 basis points on the week, and it's a very, very odd week. And there's a lot of speculation out there that investors and big fund managers may actually be getting ahead of what is a stock market reversal and buying a lot of bonds. Of course, on Friday here, bonds are pulling back a little bit, but it has been a very, very good week for the Treasury market and a bad week or declining week for yields. Now, we're going to take a look at a chart right over here, and this is the 10-year yield chart. Now, there's a lot of lines on here, and for those of you that are looking at this for the first time, this style of analysis, you could say, wow, some people call it spaghetti or one of the messiest charts they've ever seen. And those people that do understand what we're looking at, well, they really get it. What cycle analysis gives you is a visual depiction of money flow. And you know how important money flow is. It's simply the driver of the market. What we have on here is cycle analysis and also momentum analysis, which is always an important part of our analysis. And we do support resistance analysis, and those are those red boxes or green boxes that you see in there where we establish resistance level or support levels, which are just phenomenal. Let's take a look right in here, and what we have here on the bottom are called cycle brackets. There are many of the charting platforms that have these cycle brackets, and what they are is a guide of the ideal cycle rhythms in the market. Cycles are measured from low to low, and these vertical lines in here are showing you the actual lows in those cycles. And over here is the ideal low. So if there was a perfect rhythm, if you had a perfect halfway up and a perfect halfway down, the smaller ones are what we call the minor cycle. So this is the dominant cycle in here, and this is the minor cycle. And you see in here these lines, you can see that we have the minor cycle kind of outlined for you, showing it how it actually traded. Versus what the ideal cycle would be. When you get a lower low and a lower high, you have a configuration that is negative. That gives you a sense that the market is in a negative trend or declining mode. When you begin to get a higher bottom, as you got right over here, then you base out, and it tells you it's likely that the major directional component, which was down in here, was changing. We turned bullish at this point on yields or negative in the bond market and declared a bond market bear market at this point. And this you could see as the momentum indicator, and the momentum indicator has been smoothly to the upside during this period. So let's look at where we are right now. We're just going to look at these last three cycles right in here. And what that shows you is that you had this positive cycle and then another very positive cycle when you have almost no time to decline because it rallies up to 90% of this whole cycle. You don't get very big pullbacks, and that tells you you're going to get bigger rallies, as you saw right in here, as yields continue to go up. So where are we right now? That's the key. You could see the minor cycle in here coming to a bottom. So this decline in yields or the rally in the bond market was perfectly timed as far as the cyclical patterns go, or the technicals. At the same time, momentum is still strong, and this has basically maybe another week or so. Maybe it tests this low at 153, and then yields are likely to go up again. And if you've been following the action between yields and the metals markets, you know that when yields are rising or the bond market is declining, the gold market has not done well, and we're actually thinking that gold's going to be peaking pretty soon and begin to move down again, and this is in alignment with that. So I'm kind of jumping all over the place, but you could see that this decline in yields, just as this mid-cycle decline right over here was barely recognizable, and this mid-cycle decline here, once that's over with and you get into the next minor rising phase, as is coming right over here, yields then move up again, or the bond market moves down again. So there's not much time in here for these declining yields, and we're likely to start to see yields moving up again. So in answer to the question, what was the odd action that we've seen in this last week where the stock market is very strong, but yields are falling instead of rising? It's this technical condition right over here that caused it right there, where you get the decline right in here, as right in here, as right in here. That gives you that time frame for a minor pullback, and then likely yields to be moving up again. So that makes us bearish right now in the bond market starting soon. Well, let's try to pinpoint that a little bit. Here is the daily chart right in here, and you can see that the cyclical patterns in here are beautiful. The declining phase right in here, the declining phase right in here, the declining phase right in here. You see the beautiful rhythms on these lows, and then this, which was what we call a left-hand translation, where it made its peak right over here on the left side, telling you that the market was in a correction and looking like it's going to decline for another week. So we could see maybe there's a variance in here, maybe 3 to 6 days where the yields continue to move down, test this 153 low, and then begin to move up again. So if I put up the side by side right in here, you can see that what we are is in the corrective phase right in here and right in here, and likely to be with yields moving up again. This is just a technical condition that you see in here, and I want you to see that these cyclical patterns are just absolutely phenomenal. And what I want you to do, if you want to learn more about this, is go to askSlim.com. I'm trying to get this visible to you. And you can go to our cycle analysis workshop tab, and it gives you a lot of information about cycle analysis in there. And here's that daily chart again as I dance all over the place, and you can see those beautiful rhythms and all of the information. This is the slim ribbon, which is the best momentum indicator you will ever have. And when you combine that with the slim ribbon PO, which is the signal indicator on the bottom, you get unbelievable signals. You can see all of this upward momentum right in here, all of these signals right in here that says that yields are going to continue up, and now having gone neutral right over here as you see it turn blue. So we'll see when it establishes green again, it will be telling you that yields are going up again, and we expect that to happen in a little more than a week. So that is the analysis on yields, and an explanation for you why we believe that the 10-year yields pulled back and the bond market rallied. All technical, all cyclical, and I hope that was great teachings for you where you become interested in learning cycle analysis. I think one of the best ways to look at charts, and once you learn it, you'll never look at charts the same way again, I promise you. I've been doing this analysis since 1975. Absolutely incredible. 46 years as a cycle analyst, so it's kind of in my blood. And I invite you to learn more about it by going to our workshop tab and seeing the information there. So that is the explanation for why yields fell and the bond market rallied in this last week, and how technical that is. You are invited to hear me speak Thursday, April 22nd at 3 p.m. Eastern Time at this great free event, Wealth365 Summit, in which there will be over 50 speakers in 6 days. My topic, momentum analysis, the key to trading success. I think you're going to find it incredibly valuable. Please use the link that's included in the description of this post. I hope to see you there.